Today we're going to talk about why I've shifted to end of day trading. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and I've received a lot of emails lately asking me why again I've shifted or I'm shifting entirely to end of day trading. Now, as before, a lot of my emphasis was on the hourly charts, but I had originally learned on daily charts. I always felt that that was the best way to be trading. The goal was to be trading and not to be on the screen. It was to be placing orders. The way that I learned originally was old school, hand-drawn charts, place your orders in the morning with the broker on the Sydney Futures Exchange. We'd place our stop loss. Broker would confirm that order by telephone, and whatever trade management process all occurred by telephone back in those days. But then I got involved in the currency markets, and of course I went through that whole phase of shorter and shorter time frames, trying to scalp, trying to position trade in shorter time frames. But then the last few years have been mainly focused on the hourly charts, and that's been a very, very great way to trade. But again, for me, my goal was to not be on the screen. I don't like being on the screen. I spend a lot of time on the screen, and I found that it's just very detrimental, I think, long term to maintaining your long-term success in the markets. Most of my mistakes have occurred during live trading. I find that the great thing about end of day is that you can put your positions in. Number one, you can follow multiple instruments. So we'll talk about this. So I use the New York close charts on MetaTrader through my broker, which you can probably, depending on who your broker is, find your New York close charts. New York close is 5 p.m. That rollover time is the end of the New York session. So again, we talk about Asia being as the sun rises, Asia opens up, Asia, Australia. Towards the Asia close, we have the Europe open, and then London coming on board, which is the largest volume of market. And then as London's trading and New York opens up, that's where we hit the peak volume during that session. But then at the New York close, it's 5 p.m., which is 5 a.m. in Perth, Western Australia, where I'm at. So again, for me, it's an ideal time to be trading and taking end-of-day trades. Number two, reduces over trading. And again, looking at all the things why traders lose money, especially retail traders. If you look at all the stuff that's available online, all the trading courses, the ebooks, all these indicators and EAs, a lot of that is designed at intraday trading. And I think it's probably 1% of people are successful long-term day trading the markets, especially the currency markets. And a lot of professional traders don't actually trade the currency markets for various reasons. But if you're on live screen during the day, you're more likely to take on more risk, more trades, and potentially have a rational, impulsive, and emotional trading behavior, which is rampant throughout the retail trading community as well as the professional trading community. So the less you're on the screen, the greater the odds are as a retail trader to have success in the market. Now again, I haven't talked about it on here, but day trading, your spreads are a factor depending on which time frame you're on. But as you go out to the longer time frames, the spreads don't really have any relevance unless you're trading some really exotic pair. So 1, 3, 4 pips isn't a big deal when you're looking at average daily ranges of 150, 190, 100 pips. Now some of these horizontal ranges, when they move, some of the monthly ATRs on some of these pairs can be upwards of 700, 800 to 1,000 pips. So again, if you're taking on 100 pips of risk, but you're looking at 5, 6 or greater times the reward, again, even if that's on the hourly time frame, you want to focus on an asymmetrical risk-reward opportunity. You can still take on the same amount of risk on an end-of-day chart that you would be taking on a 5-minute or an hourly chart, obviously based on your position sizing and your money management rules. So again, what I talked about was less screen time. My long-term objective is to be managing following 20, 23, 24 pairs, looking for 2 or 3 of my best 8 trade type setups each week, which there are definitely there. I've followed this the last few years and gone back back tested this every single week. There's always a couple of really great trades. Do I get them all? No. But the expertise that I'm willing to fill forward, because I know I don't want to be on the screen, and I'm really focusing on just mastering the end of day with that and continuing to hopefully have a positive trade expectancy and get the same kind of results. So focusing on multiple pairs, best trade setups. Again, if you haven't built your playbook, start building your playbook and archiving your best trade setups and really start to hone in and focus on those. You know, I talk about this, Mike Bellafiore, how good can you get? Every single day you should be learning something from the market. You should be able to go bar by bar, whether it's on intraday or end of day, and start to see the same opportunities coming up every month and every week on the markets. There's less clutter. For me, I use basically a blank chart with a 20 EMA. You know, Monday to Friday I have setups that I look for, but primarily I'm a breakout trader using price action and just traditional horizontal ranges, very few diagonal, but just basic support and resistance. Larger and more reliable moves. So again, on the end of day charts, the longer the time frame you go out to, the more likely you're going to have multiple time frame traders involved in these moves. So Dalton talks about this with Mind Over Markets. When you get these significant moves, you've got the position traders on board, the institutions, the banks, not only short-term traders that are scalping or swing trading, but you've got the larger institutions that are piling money into these moves, and those are the moves that are most likely to continue to move over the course of a few days to a few weeks to maybe even a few months, and those are large moves when they happen. Larger, more reliable moves, and then lastly, more sustainable long term. So as a retail trader, that's something that you can do day in and day out. You can position trade and day trade, end of day trade those markets. It takes anywhere from an hour to 2 hours, depending on what you're looking for and how you're trading the markets. You can still keep your day job. You can work around all of that and not be on the screen. So it's something that long term is sustainable. If you're day trading, I'm sure you can already relate to the screen time involved and the hours of time involved sometimes, even if you're just looking at certain market opens and closes, that sometimes can spread over to 4 or 5 hours, depending on if a move occurs during Asia, London, or the New York sessions. So these are the main reasons that I'm looking at end of day, primarily just to keep it simple, to reduce the likelihood of me experiencing emotional, irrational losses or over trading in the markets, but also the opportunities on the longer time frame for bigger moves and more reliable moves present themselves, and once they move, the market does the work for you. So love to get your comments and your feedback below. Let me know what you think. Let me know what you're struggling with. I hope to get a bit more information up on the end of day charting and what I look for and what I do. Keep it simple, traders. Stay disciplined, stay focused. If you're not getting the results that you want and you're day trading, consider looking at end of day. Go to my homepage, get my 7-step daily routine for high performance traders. Work on the daily habits and rituals and disciplines that are going to help you keep getting better every single week. Setting goals, accelerating your learning, creating a vision of where you want to be in the next 30 days, 90 days, a year from now, and just keep getting better. So have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.